If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is October 5th, 2020. And today is Monday morning. So looking at the highlights of the day, the U.S. markets regained some of their losses after some positive news from Donald Trump saying that he is taking to the medication positively. But first, let's take a look at the economic events of the day. So looking at the economic events of the day, just one event coming out at 4 p.m. South African time. ISM, non-manufacturing PMI number coming out of the United States. Now, this is an important number both because it gauges some of the service sector's production over the past course, and secondly, because if there is any deflationary issues, it is taking into effect. Now, looking at the market, starting out with the currencies, the U.S. dollar gained some of that momentum that it lost from last week versus the majors. Looking at the Dow Jones and the NASDAQ, both making an about face and rallying back right before the news came out about Donald Trump. The commodities, gold dips below 1900, while oil bounces. And lastly, looking at the stocks, rotation continues as tech stocks remain weak while banks remain strong. Okay, now I do believe that's going to turn around today. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look here at a 4-hour chart of the Eur Usd. And the Eur Usd has had a little bit of a rotation. It got really strong at the beginning of August, okay, rallied that whole way from end of July to end of August. And then it kind of like consolidated at this upper range, okay, throughout the month of September. And lastly, taking this dive last week, okay, or the previous last week to last week, okay, from the last week of September, capitulating at 116-ish level and then bouncing off of above it, okay? But for all intents and purposes, okay, the reason I'm going into this particle history is because 1750 is an important level, which was a previous support line and a subsequent resistance. Now, over the past course of a couple of days, we've been in a really tight range, okay, after this, massive sell-off and then, the bounce after Donald Trump coming out with, the coronavirus. Now, we're smack in the middle of that. Okay, because the lower limit here is 1700 and the upper limit at 1750. And that's a pretty tight range for the currencies. Okay, when we look at some of the other currencies, the GBP actually falling apart earlier this morning. And this is due partially because Boris Johnson, the Prime Minister, mentioning that he's going to go ahead with Brexit plans, hook or by crook, despite the pandemic. Okay, so I do expect further choppiness in here, okay, as we continue this resistance-ish area at this 129.43. But remember, we do have some choppiness as we retrace from 129-ish level right now down to the 128.60-ish level. Okay, so we don't have a massive trading range to be trading in the Forex symbols right now. Now, Aussie dollar also retracing just a bit from 71.80 to 71.70. Again, a tight range for us to be trading it. Okay, might as well trade, some of the gold or some of the other stocks that are trading with a much farther range. Now, jumping into gold, okay, speaking of commodities, we are retracing here from 1912 down to 1882-ish level. We had this nice double bottom at 1855. Now, we rally from there to 1912, okay, which is about a 60-point move, and now we're retracing. My midpoint is really my area to pick this up. So if this does retrace down to 1885-ish level, we're right now at 1892. If it does retrace to anywhere below that 1885, I'd be looking to actually pick it up in anticipation it's going to continue rallying. Okay, gold is a long-term, long investment with what's happening in the world right now. Now, looking at oil, okay, this is really a tight range as well. As let's face it, okay, oil's not going to $50 anytime soon. Okay, as some of the Saudi countries mentioning over the weekend that they don't expect the price of oil to dip or to go above $50 a barrel for the next 3 years. Okay, so we're going to be trading in a really tight range between $41 and $37, okay, on the upper limits. But as today, if you look at it, we're in a dollar range. Okay, so if you do want to pick it up, it's definitely worthwhile to trade it on the extremities. Okay, so don't pick it up when it's right here trading at 37 70-ish level, pick it up when it's trading at $37, okay? Or sell it at $38, okay? If it's going to play that range, all right? But really, you should be focusing yourself at things that are trading with much more volatility. If we jump to the Dow Jones, we saw that, okay? Let's highlight this past couple of days. Now, this is Thursday's session, okay? We were really in a very choppy kind of trading atmosphere. I did anticipate this to actually retrace from that 27,800-ish level, well, really 28,000, okay, which was right up here. We were trading between that area, okay. Now, we consolidated, and then this was the news about Donald Trump coming out with COVID. The markets completely tanked on Friday morning, making this triple bottom. Okay, this was really a fantastic fade opportunity because this is a knee-jerk reaction. You don't know how to translate the news, especially as it comes out. Okay, the initial shock of the news forces the market to actually sell off, and guess what? The market kind of rallied back on Friday because we don't know what to expect yet, right? We don't know how bad the news is, and then as the news got better, okay, you see we're pretty much at the same level we were pre-news, okay? So with that said, let's clear this up. So just to have a clearer session here, okay, look at where we are. We're right back to where we were just a few days ago on Thursday before this news came out, okay? So really important to understand how these type of knee-jerk or these type of news events kind of have like such amazing trading opportunities, okay, especially if you looked to trade this, okay. I was lucky enough to be shorting this around this area because I mentioned to you guys last week it was a 50% retracement from that 29,000 when it retraced down to 27,000, okay. Let's look at it on a daily. I set up this Fibonacci retracement, right, where we looked at this right here. We had this. Nope, that's not the Fibonacci. Let's do it in real time so you guys could see this. So you don't say Fred just makes things up. All right, there we go. That's a Fibonacci retracement. And right there, this was the 50%, right? I'm going to highlight this. You can't see it so clearly, but this was the 50% retracement. Okay, this was the sell-off. This was the bounce. And the 50% is usually a point where you do want to look for an opportunity to short it. And sure enough, that gave us that opportunity and we did sell off. Now, albeit, okay, if we look at a 4-hour chart, you can see that a little bit clearer. We're just trading there at 27,700 level and we're right there right again, okay? So, with this massive sell-off, really agitated by the news, okay? But in about 6 months from now, we're not going to look at that. We're going to just look at the technicals and we're going to just pay attention to the technicals, okay? And if you looked, okay, when we retraced back to this 27,137, that was a previous low for us, okay, from before, all right? So that really gave us a lot of keys to jumping into this on the long side. So for myself, I really took this advantage of this downwards momentum and then buying it down here, okay, as the market kind of made that correctional move. It's a tremendous fade opportunity, as it's called. All right, so as these events happen, you really got to capitalize them in real time. Now, looking at some of the stocks, we saw Apple actually sell off, we saw Facebook sell off, and we saw Microsoft sell off. Okay, all of them sold off last Friday, but I do expect a turnaround today. And if we look at JP Morgan, actually rallied on the day to $97. Okay, so this rotation continues to play itself. Okay, so tech stocks are weak one day and then the banks are strong, and then they kind of shift and they kind of turn. So just pay attention to that if we do get that. It's been a long session this morning, but I think it's worthwhile just to digress a little bit for us to understand the potentials of making money in the markets. This is Fred Razak. I want to wish everybody a great trading day. Thank you.